Well, the last few days have been very interesting. If you were looking at the markets last night, things got a little bit scary. There was certainly blood in the streets, but we have had a nice bounce back today. I'm going to break down what happened in this video and where I see things moving forward. Obviously, these are my personal opinions, so nothing in this video is financial advice. You should always do your own research. Well, this really started last week when the jobs report came out, and it was a little bit weaker than anticipated. Unemployment numbers came in a little bit higher than expected at 4.3%, but also the jobs added report came in lower than expected at 114,000 added jobs compared to the expectation of 175,000 added jobs. This also triggered a recession rule called the SOM rule. Essentially, this is when the unemployment rate on a 3-month average is 0.5% above the lowest unemployment number over the last 12 months. And this rule is generally an early indicator of a recession that's coming. Then add the fact that Warren Buffett's Berkshire Hathaway's Q2 earnings report was released, and they disclosed that they sold nearly half of their Apple stock, which was a sell-off of just around $80 billion. So we started to see some downward action in the markets. But the event that really set things off had to do with Japan. Japan was sitting at negative interest rates, which is completely wild. And people are using what's called a carry trade. Essentially, they were borrowing money against the yen at very low interest rates, and they were investing that capital in the U.S. in fixed income assets and equities and creating this arbitrage. And there were some massive players that were doing this. In fact, Warren Buffett was rumored to be one of them. But the Bank of Japan wanted to put a stop to this, and they decided to raise interest rates, and the yen strengthened against the dollar. Now, add the fact that there were already events leading to a sell-off in the U.S. markets, and this led to a massive sell-off. And it obviously hit the crypto market pretty hard. So we have started to see things rebound. I do believe this was somewhat of a black swan event. That said, I don't think that we're completely out of the woods. We still have some Mt. Gox sell-offs happening. About 75% of the Mt. Gox distributions have gone out, but we still have about $2 billion worth of distributions to go. There's also some conflict right now in the Middle East that's worth keeping an eye on between Israel and Iran. And if that does escalate, I think we could see some more turmoil in the markets. And the overall health of the economy is not good right now. I do believe that a recession is coming. I don't think it's here yet. I did see, last night when we had the market pullback, there were a lot of people that were calling the end of the bull run, saying that we are, entering into this recession. I don't think that's the case. That said, I do believe we could still have some corrections and some interesting times ahead in August, but some silver lining here. The whales did not sell off Bitcoin. In fact, we saw them buy up the dip, including the Bitcoin ETFs. In September, I expect we will get some relief with the Fed lowering rates, which would be a good thing in the short term at least. And I would expect that we'll see the money printer get turned back on to push some liquidity into the markets going into election season. Also, historically speaking, when you're coming out of a quantitative tightening environment where the Fed has raised rates, we haven't really seen the recession start until 2 to 6 months after the Fed starts to lower rates. So all that said, while I still think we could have some interesting times ahead in August, I do remain bullish in the short to intermediate term. And when I say that, I mean the next 6 months. If you haven't watched my video on the bull run case and all the catalysts that are coming up between now and the end of the year for crypto, you should definitely check that out. But I will say, I do think we could have a shortened bull run compared to prior cycles. And a lot of that has to do with the fact that the overall economy in the U.S. is not in great shape right now. And I do believe that in 2025, we will see a recession. But if I am right, and no one has a crystal ball, so anyone that tells you they know exactly what's going to happen is full of shit. But I will say, I think that this upcoming leg in the bull run, I think there will be an opportunity to have some really good returns. At least that's how I'm playing it. I also do plan to incorporate a more aggressive profit-taking strategy than I would in prior market cycles. Because if we do have a recession and, this black swan event, kind of like the 2008 Great Recession, you want to have cash when that happens. And I am going to put out a video with all these warning signs that I'm talking about in the economy. I've spoken about a lot of them in some of the live streams throughout the year. This has really been my game plan dating back to last year, and I'm sticking to it.